Hello, traders. Gary Wagner with the Gold Forecast here. January the 12th, approximately 9 a.m. in Honolulu, Hawaii. We do have gold trading higher this Tuesday, up about $5. The big story is that's predominantly due to a weakening U.S. dollar. That's a plus $15, and we have predominant selling, taking it off about $10. Therefore, the change of about $5 today. On today's report, we're going to be taking a look at a couple of different gold charts. I'm also going to be looking at the COMEX gold, in which I think that the signal that we saw the other day is much more clearly pronounced, all here on today's daily report. Traders, we are looking at a daily chart of the COMEX gold. And I was doing a little bit of work on it the other day. I think you're going to find this quite interesting. When we take a look at the same pattern or signal that was developed in the Forex or cash gold, what you're going to see is you get a much more pronounced, you don't get the long-legged doji, but you get a much more pronounced doji in this particular chart. That's right in here. Now, the other thing that I'm finding very, very interesting is when we go ahead and run our Fibonacci retracement on this, and of course I am working from this bottom here at 1160. Let me point it out to you, traders. That's right down here. And of course, this record top right in here. The interesting thing is that our 23% level, just as in our other chart, comes right to these bottoms. But what I found so interesting is really how that bottom matched up with the close of the doji right in here. Of course, we received our buy signal on the following day. That's right in here. And then the market went off running yesterday. As I said, it is currently trading higher today, up about $4 to $5. The other thing that I think you'll find of interest, and this is a plausible Elliott wave count, in that when I look at the market and look at the recent activity, in other words, we came up, I'm counting this as wave 1 right here, 2 right there, the top of 3, 4, 5, 6, and 7. I see a 7 count. Now, here is what I'm finding interesting. I believe that it's quite possible we saw our correction, and here's why I'm looking at that. This last rally up, that top of this triple top right in here, did not, in fact, breach or make a new high. That is indicative of a correction. The other thing that I believe is indicative of having a corrective phase is the fact that this last low was below this low here. So what that would show me is that the most plausible wave count would be 1, 2, 3, 4, 5, 6, 7. That's our entire impulse phase. And then, of course, after our impulse phase, we would go into what is known as our corrective cycle. That would be 3 waves, A, B, and C. And that seems to be something that is very, very plausible. Now, I was under the assumption prior to this that we might have, in fact, entered wave 1. This is one of the more difficult wave counts in my 25 years that I have ever encountered. It is not a typical market. And this activity here, where we've gotten this real triple top, of course, made us realize that this wave count's going to have to be numbered a little bit differently. However, the compelling evidence, at least to me right now, was the fact that this last rally did not take out that high, so it was a lower high. That's indicative of a corrective phase. And this last move down right here, the fact that it made a lower low right in here than this previous low, that's also indicative of a corrective phase. So for that reason, I am looking at this as a very, very valid potential count. Traders, maintain your long position. Currently trading at 1386. Of course, we're in at 1375. Maintain your stops at 1348. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.